Welcome back. You're watching Stock Watch this weekend. Joining me to unpack your stock-related questions this afternoon is Alex Duys from Umthombo Wealth. You can send us your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, Alex. Quite a lot has happened on the company front this week. And yeah, of course, the big news being Anglo-American and BHP. And of course, a lot of people have been asking, with Anglo-American now having rejected this revised offer from BHP, do I sell? Some people saying maybe hold because there might still be a third offer coming. So let's start off with your thoughts on Anglo-American at this point, how you positioned yourself there, or how you would be positioning yourself there, considering also the restructure that they announced this week.
Good afternoon. Look, I guess no surprise that the Wellington offers were rejected. I think as the offers were looking to get rid of Anglo-American, Amplats as well as Kumba, never really had a chance, as well as all the regulatory hurdles we'll have to overcome. So I do think for Wellington deal to proceed, they'll have to do quite a sweetener, and they probably will have to keep the SA asset to some extent because they will have to talk to Minister Patel and a bunch of other hurdles that they'll have to overcome. So I think there's a lot of complexity there. That is why Anglo-American is proceeding to say, well, perhaps we can unlock value by doing it ourselves. So they have come with this proposal, almost the same as what Billiton has, but the only difference really is that they'll keep Kumba and but still looks to bundle Amplats. Now that does come with problems because if you do unbundle Amplats, as far as I'm able to gather, the tax burden is going to be about $1 billion, give or take. It will have to be absorbed by shareholders, and still a lot of Anglo-American shareholders that might not have direct exposure to Amplats will probably then own shares they don't want, and they'll probably be forced sellers.
Yeah.
So what happens in such a big unbundling is that most likely will be short-term pressure on the share price. But theoretically, Amplats being unbundled, they'll have more control about their capital allocation decisions, the dividend policy, and so forth. So perhaps it could add more value over a longer term period. But certainly there is some, call it uncertainties over the short term, how this is going to pan out. And as a result, some investors are positioning differently depending on speculation or long-term holding or whatever your view might be on PGMs as well.
So basically, if you decide to hold Amplats or you decide to buy Amplats at this point, as it has been under a lot of pressure, you may have to actually be a person that takes a long-term view and maybe stomachs the short-term pressure that we might see in the short term. Is that right?
100% correct. So if you do want to hold Amplats, you do have to accept that it's going to become quite short-term volatility, most likely downward pressure. Because it will be for selling, yes. So that is a bit of a problem. So, but if you're looking for direct PGM exposure which does not have corporate action overhang, then perhaps it's better to switch out of Amplats into an Impala or a Novum. So just be careful what you're trying to achieve. I mean, if you do have a short-term horizon and you're positive in PGMs, Amplats might not be the best position for you.
Yeah, all right. I hear you on that. Well, a stock that a lot of people aren't talking about because we're talking about holding, buying, selling, Anglo-American and Amplats, but actually BHP. There's a question here. Is it not time to short BHP stocks?
Look, so BHP is the benchmark when it comes to global diversified miners. They always generate quite consistent group EBIT margins, good capital allocation. But they have become so big that they need to start doing so-called transformational deals to really move the needle. And history will tell you that's usually a risk, and a case in point is now the fact that they're looking to buy Anglo-American. Even though Anglo-American is small relative to Billiton, it's still a sizable capital allocation decision. And the chances of them overpaying for it or leading to suboptimal returns is quite high. So yes, I would say there is some concerns on Billiton from that perspective whenever you are the acquirer of another large asset. And at the same time, they're also heavily exposed to iron ore. So if you're not comfortable with iron ore, that would also be a negative see-through for Billiton, but still be very brave to bet against Billiton. I still think it's a fantastic business to hold if you do want diversified miners, but the relative valuation differentials and so forth has perhaps widened a little bit too much, and you do have this corporate action activity, which makes it a little bit risky. More risky than usual, I would say, for Billiton.
All right. Well, there is a bunch of stocks that a viewer has sent in, and so these stocks are in their portfolio, and they've given a number of reasons for holding, and they're wondering if there should be any adjustments to make. Well, let's actually start off with Pick n Pay. I think that's 8% of their portfolio. And the investment horizon is 5 years. Of course, giving some of the reasons for holding the stock is overbeaten, and the rising tide of low interest rates will lift all retail ships. I believe management will be successful in turning it around. Boxer will fetch a solid price when it does, of course, list. Are all these reasons enough to be holding Pick n Pay, Alex, or is there still just too much risk there and questions on that turnaround?
But all those risks, all those factors you mentioned, they are valid, but it does come with execution risk as well. So,
yeah,
I mean, so if you look at Pick n Pay, the market cap relative to revenue and history, it does screen extremely attractive. But to turn around in this economic environment with an extremely competent competitor in Shoprite is going to be an extremely hard challenge. And the problem with Pick n Pay is they've got a very weak balance sheet, which means they need a lot more capital. So they might raise this 4 billion, as they alluded to, with the rights issue and listing of Box and so forth, but it doesn't seem like nearly enough capital on face value. So I think so that creates uncertainty. That's why we've got, I guess, two school of thoughts. Those that are perhaps buying the turnaround plan, and those a bit more circumspect. We still, of course, need to wait for the details. That's going to come in the near term, and I think that will clarify a lot of these issues we have. I am lukewarm on opportunity, but I am quite aware of the risks. And the big risk for me is that capital 4 billion will not be enough. They probably need to raise much more than that. But then the problem comes that the Ackerman family can't probably issue that type of, they don't have the capital follow their rights. So they might need to move beyond Ackerman family if they really want enough capital. And I'm not sure if the appetite is there from the family to allow that to happen. So I think there's going to be some talks behind, closed doors about shareholders as well as Ackerman family. And so if they can give them more capital. So that's one side of the equation. And of course, what they're going to do in an economic environment, will they actually be able to do it? Because inflation is also coming down now in South Africa, food inflation, so it'll also make it more difficult to grow your top line. While cost inflation, of course, is still very high as we know.
Yeah, indeed. I guess maybe things will start to become clearer also in the second half of this year when that interest, and if that interest rate tide turns on that front. But really also quite a difficult environment there with Shoprite basically eating a lot of the lunch. Let's go into Sun International. 8% of the portfolio here as well, 5-year horizon. The benefits, huge revamps on Sun City and Piedmont transaction to boost future earnings. Debt a bit of concern. Is debt actually that much of a concern, considering also the Emperor's Palace and just basically how cash generative it is, Alex?
So high debt levels is always a concern because that doesn't give you room for error, right? So I think that is key to understand, even if you are a high cash generative business like Sun International. So it does come with risk. For example, if there's another recession or COVID, for example, you've got all of this debt, you're in serious trouble. But assuming we don't have that and it's business as usual, they should be able to generate more than sufficient cash to finance this additional acquisition. I think also there's quite a few assets they could look to sell, that will perhaps also help the deleveraging. So I think that's something to be in consideration. So I'm actually quite optimistic about Sun International if they can execute on this transaction and then, of course, be able to realize some of those assets to pay down debt and so forth. Empress is a very good asset. Some of the other assets are perhaps but not that great, so I'm not too sure if they can get rid of it, but certainly Empress is a good asset, will complement the business. And there's plenty of other factors as well. They're doing exceptionally well in the Sunbet side of the equation. I think that's going to continue to some extent. And Sun City as well, finally actually contributing, from a free cash flow perspective. And does seem like they're starting to get the formula right there. So yes, I'm quite cautiously optimistic about Sun International, but you shouldn't underestimate the risk when it comes to high leverage deals. There's always something to be concerned about.
All right. Let's get into education stocks and particularly Stadio and Advtech. Advotech, education, defensive, quality stock with balance sheet, and Stadio there continues eating Unisa's lunch and low capex growth. And of course, maybe there's the extra upside of these higher education institutions that have been deregistered by the Department of Higher Education. There we could get some sort of influx into these counters next year. What do you make of Advotech and Stadio?
I like both, so I'll start with Advotech first. Yes, a business that is doing very, very well, very strong balance sheet, generates extremely good cash generation, and capital allocation has been quite good over time. They're also doing very well in Africa. So that's one of the few rare success stories of African companies going to Africa, growing nicely there, very high margin. Specifically also in the resources side, that is your recruitment type of business, also doing quite well. And then, of course, the university side of the equation, which is going to do, I think, is going to grow double digits probably for medium term. Specifically, if some of these institutions are allowed to use the term university. Because we know public have reached scale, so most of it will have to come from private universities going forward. So I think Advotech is very well positioned. Valuation, I would say, is fair, but it's still growing quite nicely. Then Stadio, I also like. So the viewer did refer to that they are competing with Unisa, and that's always great because you've got this huge incumbent, which is, so far from its glory days, it's not even funny anymore. So it makes it quite easy to gain market share for Stadio. Remember, Stadio is still 80% is what I refer to distance learning, as you type of Unisa type of client. And only 20% is going to be contact learning. So that is what they actually build these campuses like the one in Centurion and the one they want to build in Cape Town. I think, yes, the fact they do have low capex requirements is a major positive because that means that the J curve, meaning the profitability, will be much more front-loaded compared to schools. We have to build the big infrastructure, the sporting fields, and so forth. You don't really have that when it comes to contact learning. So the free cash flow is much better in a business like a Stadio. And it means your return profile is also more front-loaded, which is positive. So, yes, I think both of those are rare growth stories in South Africa, and it's got good management teams behind it, and I think they're well positioned.
Yeah, well, something that hasn't been growing is the share prices of the healthcare stocks this week, Life Healthcare and Netcare. There's a question that just came in now, your take on those. It's been actually quite interesting seeing the reaction of these shares to kind of the election noise. Of course, we did have the NHI being signed into law this week. We did see Discovery shares there taking some pressure. I haven't actually seen what Life Healthcare and Netcare have been doing in the past 2 days. But your take on that, under pressure again today. Alex, your take in this kind of environment and political environment even?
Yeah, it's a tough one. If you look at it from a historical perspective, valuations, they do look very cheap. But you must remember the valuation was also excessively high all of 10 years ago. So I think it's probably trading closer to where it should be trading. These businesses aren't nearly as defensive as people think they are. And also the quality is not as good as people also feel. And the reason for that is because we're not growing our economy. South Africa was growing our economy at 3%, and every year the middle class are increasing and more people get access to private healthcare. I think these businesses will be much better positioned. But we're not. We're not growing at all healthcare in the country. And also cost inflation as well is becoming quite problematic. And at the same time, we don't train enough doctors and specialists. So the median age of our specialists in South Africa is about 60. Right, so that means that they've got huge pricing power, and at the same time they're clashing heads with discoveries and so forth. So SA healthcare is not well positioned. We need to invest a lot more in skills, and we need to get much more growth in order to grow the health schemes. Now, on top of this, you get the disastrous NHI, which will be pretty much the final nail in the coffin for a lot of high LSMs Africans, specifically doctors. I mean, there's no reason. Doctors are already overworking. I mean, go talk to any specialist they would work 6 days a week, 12 hours a day, pretty much. Now, if you want to tell them they have to work more because they have to get involved in NHI, they're not going to do that. They're going to go for more comfortable lifestyles in Australia or Canada, wherever it is. So, you can't solve these problems by just stroke of a pen from the politicians. So, and of course, the funding side. So I think this is a value trap to answer the question. I think there's too many variables at play here. We need to grow the economy, and we need a much more pragmatic solution to call it public and private healthcare in the country. But the path we're on the moment is not the way to go.
Yeah. An interesting stock, Alex, that markets were actually quite vocal about last year was Reunert, the IT and renewables energy counter. Whenever people were talking about, stocks to kind of play Eskom's inefficiencies and obviously load shedding. But now we haven't had load shedding, I think, in about, 2 months, 3 months. And it's suddenly gone quiet on Reunert. Would you still be looking at this counter on your side?
Yeah, certainly. I mean, Reunert's going to report, I think it's next week or the week after. It's soon. We're going to get results imminent from them. So we'll get the latest on what's going on specifically there. I think SA energy crisis is still far from over. I think people need to remember that even though load shedding is slightly better than it is compared to last year, there's still major structural issues we need to do. So one of the main things an Eskom will of course want to do is split into different parts. And one of those will of course be transmission. Now, if we want to reconfigure our grid, meaning we have to switch from coal to renewables, we need to build new transmission lines. That is where Reunert is going to play a key role in there, combined with the actual building of supplying of new renewables and so forth. But the transmission line investment that will have to be done, private sector companies like Reunert, I think, is going to benefit from that. So yes, that's something to be cognizant of. Of course, that the ICOS acquisition, and we have to see how that's panning out now, the way they implementing it and so forth. But yes, I think Reunert is still very well positioned. They've got many factors that potentially lead them to growth. Let's wait for the details and we can give a much more informed view whenever they release results in the near future.
All right, we will be looking out for those numbers soon. Alex, let us get to your stock pick for today. What are you hanging your hat on?
Yeah, so mine is Afrimat. So I attended the results presentation yesterday and I walked away very bullish. I think important to note, when you buy Afrimat, I think a medium to long-term view is required. And earnings and the share price will not go up in a straight line. There will be periods where they will disappoint because it's still a cyclical business, ultimately in resource, right? So, for example, iron ore will go up and down. But they are investing, in interesting projects. So, for example, in Komati, the Afrimat, they're finally starting to gain traction there, and there's still more to come. It's really 50% of profit. I think that's going to grow over time. And of course, what's been topical of late in the news is the Lafarge deal. Now, this is a business that's got excellent assets, but has been run into the ground by previous management and lack of investment from the shareholders. Now, considering Afrimat has got a very good track record of turning on businesses, I would be giving them the benefit of the doubt that given them enough time and some capital, they will be able to extract a lot of synergy out of Lafarge. And at the same time, we're starting to see some building activity picking up in the infrastructure side. And they incidentally got assets now. So I think they are going to benefit immensely from that. So for me, it's one of those you buy and hold. It's once again a rare growth stock in South Africa. Excellent management, excellent culture, and very good capital allocation track record.
All right. Well, thank you so much for your time and for your analysis today, Alex. Really appreciate it. There was a question that just came in. Are we still going to sell in May and go away? To the viewer, I will be asking that on our markets wrap on the close later on. Thank you so much for your time, Alex. That was Umthombo Wealth's Alex Duys.